Good morning, traders. Welcome to your 7-minute market weekly update. Today is October 20th, 2012. Just wanted to say that it is 5 o'clock in the morning here, so if I seem a little bit groggy or scattered brain, I do apologize. In addition to that, I am recording off of my MacBook, my MacBook Air, simply because my main computer, which has all the processing power and has all my graphs and all that, somehow decided to blow out its video card during the week last week, and thus keeping me from being able to create a video on a faster PC. So I hope you guys bear with me. If you can bear with me, that'd be great. I did order some video cards yesterday. It just has not come in the mail, and hopefully it does come in the mail by tomorrow so I can get pumping, start making money next week. In any case, the first thing I wanted to talk about was the SPY, as we always do. So let's take a look at that, and give me 1 second here. Alright, this is the chart of the SPY, which is the ETF that tracks the S&P 500. To alleviate any type of scatterbrainness that I normally have, and especially that I'm tired, it might be even worse. What I've done was I wrote everything down in order, so I'm not all over the place. And I hope this makes this video a little bit quicker. Obviously, it's going to be a lot longer than 7 minutes due to it being a weekly video. So in any case, let's get started. Boy, we got a lot of lines here. This is just a crazy amount of lines. So what I'm going to do is delete all of these drawings here so we can get a better picture of what's going on. Actually, I won't delete all the lines. I'm just going to delete the ones since the previous video. All right, give me 1 second. Alright, so we are back in business. All the lines that were added during this week has been deleted. The only exception is this 137.51 mathematically calculated level here, which I actually made today. Alright, so this level here is actually a level that I made this morning because of all this moves here. I was able to get more data to calculate another level, but we'll get to that in a bit. Right now, what we want to concentrate on is this rising wedge or rising triangle or whatever anybody wants to call this, and how it was predicted that after we broke out, that this was going to be short-lived, obviously right into this 147.05. It's not perfect, but it is pretty good. It comes back down into this 144.30 level, and then comes back up right into this 147.05 level, and then we broke down, confirmed the breakdown, and then we got this not mathematically calculated, this predicted breakdown level from the middle. Now again, I've never seen anybody predict levels the way I do in this scenario here, where you have this rising wedge, rising triangle, ascending triangle, whatever you want to call it. What I normally do is go in the middle. Normally this works best in a triangle situation such as this one, and what I do is I go in the middle of the single pivot point, the closest pivot point to the middle, which happens to be this one. You draw a line straight down, you get this this line here, and then you put it at the breakout level there. That normally works quite well. That has already worked for, I believe, I forget which one, but I'll show that to you later. In any case, this is our predicted level for a drop. We didn't get there. I also predicted possibly a 141.95 tag before we get a bounce, and we did not get that either. These mathematically calculated levels are not predictive levels in regard to, if you're new to watching these videos, they're not predictive levels in regard to that's where the price is going to go, but it's more predictive in the case that if it does get there, then expect a bounce, and that's pretty much how it's been working thus far. But because we've already gotten close to this 141.95 level, there is a possibility, I'm not saying a probability, but a possibility as of now, because this could already be considered a tag. These levels are not 100%. I mean, it's pretty close up here, but it may not be this close down here. We may get an intraday bounce off this 141.95 level, but I would not actually put money on it for a swing trade. Why? Okay, well, based on just a mathematically calculated level, and again I'll show you something else later, but based on just that alone is not enough for me to put the odds in my favor that we're going to get a bounce. And even if we do get a bounce, that's great. It's just that I'm not, if I wanted to do a 50-50 gamble or 60-40 gamble, 40% being in my favor, then I just go to Vegas and then drop money on the table, because that's pretty much the odds I'm going to get in Vegas. And that's why Vegas makes money, because they count on people gambling and losing money because the odds are in their favor. You want to be the casino, you want to be the one with the odds in your favor, and therefore that would not be enough odds in my favor just to base a trade off this 141.95. But we do have another level here, which is 139.21, which is still a possibility. It's close to this predictive level here, but we may not even get there. So this 140 level, which is a predicted level from this line here, right, where we just got it from, would make more sense. So if it does hit the 140, 140 flat level, then I may actually take a long trade on that. And in addition to the 140 level, we have all this consolidation here, which gives it a lot more support. And if I'm not mistaken, we may actually have a Fibonacci retracement level. I'm not sure. Let me just I could actually be mistaken, but let me just try it here. Sorry, I'm using this really junk mouse. And there you have it. Yep, we have a 382 Fibonacci retracement level. So that 140 level would be a pretty good level. If it gets into this 139.21 level, then so be it. We'll probably get a bounce there. There is a possibility, but I highly doubt it. There is a possibility that we get into this 137.51 level. Okay, so keep that in mind. Now, moving into what happened this week here. This week we had this run, these 3 huge candle run. What is that from? Well, like I said in previous video, this week was going to be a very volatile week simply because this is the week that options expire. And when options expire, the institutions are the ones who write these options, so they're the ones to lose the most money if they don't get this market going. Now if you think about it, right, you have this downtrend over here, not this downtrend, well in the intraday it's definitely a downtrend, but this breakdown here, everybody's buying puts, everybody's short the market. The institutions, this is the week that options expire, want your options to expire worthless, meaning let's just say you bought some puts over here. They will spike this market higher, which is exactly what they did, to either do one or two things. They want you to sell your contracts to somebody else because you're losing money, or they want you to hold on to the contracts so they expire worthless, in which case it did. Because after we bounce back into this trend line here, which is actually a retest, and this is normal, right? We all know that a retest of any trend line is a normal thing, and then a short can be taken after that, in which case this if you had taken a short here would have been perfect, and that's why I had it. That's why I had the previous video there. But in any case, any breakdown, you come down here, right, and then you back test that trend line. That's a really good place to take a short. Okay, so you take a short simply because the institutions bring the markets back down on Friday, and guess what? If you had bought puts over here, your options would have expired worthless, and therefore institutions make more money than they lose money, and that's just how the options expiration week is. And that's why a lot of traders should be a lot more cautious when it is the week of options expiration. And every week of options expiration is every 3rd Friday of every month. Okay, actually options actually expire on Saturday, but you can't make trades on Saturday, so just think of it as options expire on a Friday, 3rd Friday of every month. Alright, so moving on. Why would you have taken this trade over here? Well, sure, because it retested it backtested this trend line here, so any close above this trend line would have told you to stop out, but it didn't. We created this doji candle here on higher volume. You see that? Never mind this red. Oh, sorry about that. Let me just grab this trend line here. Never mind this red candle here that was created on Friday. If you just look at this white candle here, which is purely a doji candle, it was higher volume since the past 6 days, which tells you that this is a indication of a possible reversal, especially a doji candle on a backtest of this trend line. In addition to that backtest of this trend line, what you could have done was drawn a trend line like this. All you needed was 2 pivot points. I already had this trend line in here. All you do is you connect this pivot point with this pivot point, and then you could have expected, this is a 3 indicator. You had this move up into this back test of this upper trend line, then you had this upper trend line over here, then you had this doji candle, then it was on high volume. Why wouldn't you take a short trade on there? And therefore, if you had taken that short trade, you'd be smiling because Friday they sold it off. I did not think, seriously, I did not think that Friday was going to be such a big sell-off, but it did, and that was a pretty simple, easy, predictive move. Okay, just keep in mind that I still believe that because it is the time of election, they're not going to let this market come down crashing. I seriously believe that if they, I mean, they're going to do everything possible to keep this market up. Now, it's very hard for them, obviously, for them to keep this market going, and it's simply because they just don't have enough momentum to keep the sellers out or to keep the bears out. Right now, it's just a battle between the bears and the bulls, and the bulls are basically the institutions, and the bears are the retail sellers and maybe some hedge funds out there. But seriously, right now, they're having a hard time propping this market up, but do not underestimate them, because once we have about maybe 2 weeks more before the elections, and as we get closer to the elections, they're probably saving all their money right now, and they're gonna dump everything into the market one time to prop this market up, to shoot it to the stars. That is a possibility. Not right now, though, not a probability. That's not what the charts are telling me, right? But you have to also include and be aware of market manipulation, and that's why you always have your stops in place. And once you're in the money, there's no reason why you should be out of the money. You should already have a break-even stop, and therefore that will protect you from any thing like that. So, moving on. I don't want this video to be crazy. Alright, so now after this upper trend line here, we bounced off. Where is the next? So what do I think is going to happen next? Well, what you can do is you can get this pivot point here. It's not really a pivot, but it is a consolidation sort of pivot thing over here. You can connect it to this pivot over here. You connect it to this pivot over here, and technically, if you want to get technical, this is a pivot and this is a pivot, and so all you need to do is connect these two together. But I just want to make my lines a little bit nicer. It is an art, unfortunately, and then you can just draw a line straight across, and what you have is a potential bounce off of this bottom trend line over here, which happens to coincide with this 141.95 level. Like I previously talked about, would I take a trade or a long trade on the 141.95 level alone? Probably not. But because it is around this bottom trend line here, then there is a higher potential, and gives me a little bit more odds that we may actually potentially have a bounce off of this level here. And what's interesting, just backing up just a little bit here, this 144.30 level, if you look at that, remember I said this could be an intraday swing, an intraday trade, a multi-day trade, and or a gap. This is a perfect example of a gap. This level here is 144.30. The high of this candle here was 144.23. That's 7 cents off. Not a big deal. The next day we gap up. You see how these mathematically calculated lines can predict one of those three things. I am still working on a solution to find out which one of these three things it's going to do. It is close to impossible for me to mathematically calculate that, but I'm still trying, just to let you guys know, and I'm not going to give up until I do find a solution to this problem, or at least something that'll indicate a little bit more than, hey, it could be intraday, or it could be a gap, or it could be multi-day. I don't know. But for now, these mathematically calculated levels have been holding up and has been doing pretty well as of late. Alright, so I do expect maybe at least some sort of bounce over here, maybe a consolidation pattern of some sort. We could actually come down into this level on Monday and then get a strong bounce. It's really hard to tell at this point, but all we have is this bottom trend line here and 141.95 level. Let me see if there's also a Fibonacci retracement, possibly giving us an indication that we could also get a bounce off of that level there. All the way up here. Yeah, so there is a slight possibility. We are going to have some support here right at the 25% level here. So we're going to have some pretty good support all in this area right here. So just keep that in mind. This area right here will be support around the 141.95. I have another level here at 141.58. So, there is a possibility that we actually may come down, right, consolidate a little bit, and then break lower down to this 139.21, which is a possibility. Again, I'm probably going to take a trade at 140 simply because that is our predictive level. So now, let me take one more step back here. How did you know that you would get a bounce off of this level and not off this 141.95? And I do apologize to you guys because I did not catch this in my previous video. I should have put it in, and I do apologize for that. But if you take this pivot point here and you connect it to this pivot point here, which is 2 pivot points, and that's all you need to validate a trend line, and you draw it straight up, it's already into this bottom trend line. Friday went back into this bottom trend line. Before our options expiration, it went into this trend line. So this indicated a possible reversal, and that's exactly what it did. Okay, but the fact remains we didn't do it on high volume. This wasn't a reversal candle. but it is in fact a trend line. So if we can break down from this bottom trend line here, this is the big trend line. Okay, this bottom trend line here, let me delete this trend line up here so we get a picture. This trend line here is the trend line to watch. If we break down this from this trend line and we confirm, then I'm pretty sure we're going to get to that 140 level, and definitely the 141.95. Okay, so the 141.95 is still in the cards. The 139.21 is still there. The 137.51 level, which is the level I just calculated, is a possibility, but a very slight possibility as of now. I don't know if we're going to get there until after the elections at least, but it is possible that we get there. I just don't think it's going to be anytime soon. Maybe in the next month or so we could probably get there, but I wanted to leave that calculated level in there just for future reference. Okay, and of course, so this is all the lines. This is the predicted level. This is the predicted level is saying about 140. Okay, it's 140.09, but you know, around 140. So in between these two levels here is definitely something I'm gonna go long on. In these levels over here, maybe an intraday trade just to be safe, or if you do take a long trade on that, then you know, just be very cautious, or as cautious as possible. All right. Okay, unfortunately, I cannot see how much time I'm using up now, so I'm just going to move as fast as possible. I wanted to talk about the cues. The next thing I want to talk about is this. Alright, so we have here a head and shoulders pattern. If you guys can see it, if you guys cannot see it, I really don't like this head and shoulders pattern, to be honest, but it is definitely somewhat of a head and shoulders pattern here. If you kind of just dry it out over here, I hope you guys know what head and shoulders patterns are. But if you look it up on the internet, you'll definitely, I mean, head and shoulder patterns are very popular patterns, are very old school and everything. Has nothing to do with you know, anything new or spectacular, but a lot of traders do use it, so it is something that you should be aware of and maybe possibly trade off of, because everybody else is going to do the same thing. You have head and shoulders and you have inverted head and shoulders. You go ahead, look it up on Google. You can also look up how to get the predictive price off the head and shoulders pattern, in which case I'm going to show you now. What you do is you get the top of the head all the way down to the bottom of the neckline, alright, and then you take it out and you put it to where the breakout is, which happens to be there, and this here is your predicted price. And when I say predicted price, this is normally the minimum amount of where the predicted price should have gone. Now, like the SPY, the Qs had the same exact pattern, except a little different, in which we had a breakdown from this trend line over here. We broke down, we confirmed, we went right into the 68.38 level, predicted level. Now, I'm going to be honest, these levels aren't 100% accurate. I'm not going to move my line up just for this video. The low of this candle was 66.55, so I was off. I was not able to get this trade here, but this trade here was an awesome short. I mean, we back tested just like the SPY. You back test any trend line. We are into these two moving averages that are, you know, kind of like crossing over each other, and your stop is really simple. Any close above these two moving averages, you would have stopped out and it wouldn't have been a big deal. The pattern would have failed. That's fine. Your stop is going to be minimum, but you take a short and then we come crashing down. Okay, why didn't I take it at the 66.38? But just like just like I explained in the SPY, I wouldn't take it because this was close enough here, which means if it's close, it is considered a tag, and then I will not take it after that. The next level I have is 64.58. Now, because let me just draw a line here, because this missed it by this much here, what I'll simply do, and this has worked multiple times, and we move it. Oh, you know what? I'm just making it a little bit bigger here. Anyways, this level here, the 64.58, I would take it a little bit higher than the same amount between here and here. I would take it between here and here, which is why I have my level at 64.79. So I do expect a bounce here at about 64.79. You could probably take a trade for on the long side. If we go straight into the 200 moving average, we would also have you know, fulfilled the expected drop from the head and shoulders pattern at the same time, and your what do you call, your level to sell from the long side is the 66.38. Okay, so that's pretty much, this is just, again, this is my opinion, so it's up to you what you want to do, but basically and simply put, this is my opinion, and that's pretty much what I'm gonna do depending on what it looks like. But yeah, you know what? I did miss something that I wanted to talk to you guys about, and that was volume. Real quick, what I wanted to talk to you guys about was definitely the volume here. If you notice, we did close below the 50 moving average. Of course, like I always tell you guys, we need another day that closes below this day here to validate the close below this 50 moving average, and to ensure that the institutions aren't trying to trick you. Well, here's the key thing: we did it on higher volume, and this volume was pretty high ever since, I don't know, back in September 13. Okay, because of that volume, this does confirm the breakdown. In my opinion, we should be heading lower. Okay, so just wanted to put that out there. And in case you guys are confused, a higher volume pattern can indicate a reversal or a validation of a breakout. Okay, so if there is a place where it's breaking out or breaking down and it's doing it on higher volume, that validates that breakout or breakdown. If the high volume is coming into a resistance or support level and you have a indication of a reversal based on the candle, then that validates the reversal. Okay, I just wanted to make that clear before I move forward. Alright, the next thing I wanted to talk about is gold, the GLD, which is the ETF that tracks gold. Let me load this drawing over here as fast as possible. Okay, so we had this 174.29 level. Would have been a nice short if it even got there. The high here was 174.07. Again, these calculated levels aren't perfect, but it was pretty darn close if you ask me. Unfortunately, I was unable to take this trade because it didn't hit my target. In any case, we come down, we consolidate. Well, not really a consolidation, but yeah, it was a one-day consolidation. We come down again right into this 167.77 level, and this level was created back in September 14th. The low of this candle is 167.53. Not a big deal. If you had taken it to the long side at 167.77, you would have made money. The high of this candle was 169.95. Again, how I would have played this was simple. You take the long trade on the 167.77. This is what I'm talking about, having stops in place and having break-even stops in place. Once I'm in the money, in intraday I would have already been in the money. I would have had a break-even stop. At any time at this point, I could have sold it. Let's just say I was greedy and I didn't want to sell it. It comes back down. I would have stopped out break-even. Break-even meaning I don't lose money. It's like I didn't even take the trade in the first place, which means there's no excuse, right? So I come down and now I break down through this 167.77. Obviously, again, after the first tag of the 167 or any mathematically calculated level, it is untrusted after that, and therefore I will not take another long trade if it hits the level again. And sure enough, we break down, we go right into the 50 moving average and close to this 165.75 level. We bounce off. I wouldn't say this is a tag yet, but it's pretty much close enough to invalidate this 165.75, meaning if it does tag this 165.75 level, I will not take a long trade. Okay, I'm gonna probably have to recalculate or make more mathematically calculated levels for the GOD. In any case, this is gold. Now keep in mind that this here was a move on higher volume. So is this considered a breakdown? It could potentially be considered a breakdown, but I don't think so, not yet. So this actually could be considered as a potential reversal. Maybe 1 or 2 days, we get a small bounce in the GOD. After that, I think we head lower, at least to this gap fill level over here. And again, until I make more mathematically calculated levels, that's pretty much my thing. But ultimately, there is a possibility we get all the way down here. You know, it's so far away, I highly doubt that's even going to happen, but because we have all this consolidation over here, there is a possibility that we can actually get there. Okay, so let me talk about some other things here. Now, a analysis would not be complete without talking about the dollar, because everybody knows that the market is inverse to the dollar, so there's something that we need to pay attention to. All right, so brief recap on the dollar. We had a breakdown from this upper trend line here. We did confirm. We bounced off of the 78.74 level. The low of this candle here was actually 78.72.5. We get this trend line from this pivot and this pivot point here. Let me just zoom in. We get a bounce, and then we retest this trend line again. Now again, the retest of a trend line is probably one of my favorite trades to make, because your stop is really easy. Any close above the trend line is going to be your stop, so your losses are going to be very small. Okay, so in any case, if you had taken a short here on the dollar, or taking a long trade on the SPY, which is because it's inverse, you would have seen that the dollar would have pulled back. We created this reversal candle, but we didn't create this reversal candle here on higher volume, so that wouldn't have been a valid trade anyway, and we had no other indications that this would reverse. But regardless, it reversed, went back into this trend line to retest one more time. I would not have taken this short trade because it's the second time it's already hitting a trend line. I do not trust it after the first time. It's kind of like a wall. If you bang on it once, it weakens. If you bang on it anytime after that, there's a possibility that you may break down the door. In any case, we break down, we come close to the 78, 74 level. We do not tag it, and then we start heading up. Here's the thing, though. If you look at the dollar, if you look at the pivot points, we are heading higher. We have a high, we have a high, we have a higher high, we have a low, and we have a higher low. Okay, so this means that this confirms the short-term uptrend, meaning the trend has changed from downtrend to uptrend. So if we have an uptrend on the dollar, that means we're going to go down on the markets. That's simple. But just keep in mind that we have these two moving averages up here, which means this US dollar is still weak, and the Feds can easily push this dollar down. So just keep that in mind, and they might actually do that right before elections to prop the markets higher. We all know that that's actually a possibility. Okay. All right. Speaking of these mathematically calculated levels not being perfect, I just wanted to show you guys some stocks that I rarely do, but I'm gonna do right now. We had this 47.50 level. This is the JJC. All right. We went right into it. And then we bounced off, and then now we're right into this 45.83 level, so there's a potential of a bounce. Would I take this trade? No, I wouldn't, because the 200 moving average is right there. So you know what, I don't even know why I'm talking to you guys about this. Oh yeah, I know why. Because if we get into this level here, this 44.99 level, or the 44.87 I should say level, the JJC could be taken for a short run to the upside. Okay. Now the next stock I wanted to talk about is VMware. VMware is just having a bad time right now. I had this level at $86.33, a very beautiful level. The low of this candle was $86.32. It was off by 1 cent. So these levels, you know, they're not perfect. Okay, so we come down into this 86.33. We get a 2-day bounce. It was a very nice bounce because the high of this candle was actually $90.92. Okay, so that's a $4 bounce. After of which you would have had your break-even stop in place, and if you had held, you would have been stopped out break-even. Again, the second time hitting the same level, which is 86.33, I would not have taken the trade. Sure enough, we break down and we come close to this 82.55 level. Where do I get that level from? I mean, if I get this trend line, this pivot point here makes a trend line. Okay, in addition to that, we have this 82.55 level, and let's just see if we can get another level out of that from, like, say, a Fibonacci retracement or something of sorts. If I just go up this way, okay, no, we don't have anything there. Well, alright, well, so this is how I would play VMware. I may actually take a trade off this trend line here, or the 82.55 level. My stop would be any close below. Oh, you know what? I'm sorry, I do apologize. I'm just wasting time in this video. I would not make a trade on VMware because they have earnings on Tuesday. I just completely forgot. So yeah, I don't play earnings because earnings can go either way. So moving on. This is a chart of Seagate, which is STX. Okay, so we had two mathematically calculated levels here that's been holding up very well. We got this tag over here. The low of this candle was 29.18. Alright, so that's about 6 cents off. We got another tag here at 29.16, which is about 4 cents off. We come back down and we finally break down from this and we retest it. The high of this candle was 29.03, and then now we're coming back down to potentially test this 26.62 mathematically calculated level there. Now, the reason why I kind of like that level, and I may actually wait till it hits this green line here, is this is the gap fill level. But you know, a lot of people have this thing about gap fills, and in my opinion, when you're coming down from a gap fill and it's a red candle, I go from the open of the red candle, not from the the close of the red candle, not from the open. So a lot of people would say that this is gap fill here, which just so happens to coincide with this 26.62 level. But a real true gap fill is actually the close of any red candle, simply because that's where it closed. So the next day it'll gap up, right? From the bottom over here it gaps up. So you know, it just doesn't make sense to me, and that's how I play my gaps. But anyways, moving on. Seagate has their earnings coming out on October 30th, so just keep that in mind. And I have a little note here. It says wait until at least the market hits the 141 level, because if I'm wrong in this bounce in Seagate, then it wouldn't be so bad if the markets are going down too. So just keep that in mind. I don't know what Seagate's going to do. This isn't one of the better trades I've seen. It's just because auto moving average are just kind of like coming down like a wave right into the price. So just keep that in mind. But I'll keep you guys updated midweek. You know, once I get my video cards in to fix my computer, what I'll probably do with Seagate. But you know, right now this is probably not the better trades to look at. Moving on. So what are the better trades to look at? Apple. Apple is the one that I really want to watch. Okay, so Apple had this breakdown. We had this upper trend line here that I also broke down and confirmed from, and so on and so forth. Okay, I have a level here at 591.51, in which case I'll probably take a long trade. Yes, they do have earnings on the 25th, which is I believe Wednesday. So just keep that in mind. I don't know if earnings are going to be good or not, but if it gets into this 591 level, say on Monday, then I'll probably take a trade and sell it on Tuesday. Okay, that's my guess. And right below that is a 200 moving average. So even though it does pierce the 591.51 level, not a big deal because the 200 moving average is right there. Okay. Alright, so this is a chart of Amazon. I kind of like Amazon because the earnings is close, which is on the 25th, the same day as Apple. Amazon came right into this 239.02, had a bounce, and now we're coming down again. I don't know if it's going to bounce again or not, but I would not take this trade. I do, however, think that Amazon has the potential of getting into this 220.53. So why did I just say I kind of like this chart? Because of the earnings is so close. Because look how far away price is. All I need is 3 days after or before earnings before I can actually reanalyze and take a trade. So let's just say earnings are bad. Probably not, but let's just say earnings are bad. Maybe 1 day, 2 days, 3 days, boom, into the 220.53. I take a long trade on Amazon for maybe 1 or 2 days and I'm good to go. Okay. Last but not least, we have Cena. Load my drawings there. I have a calculated level here at 52.92, and we have earnings for Cena on November 14th. So that's quite a bit of ways. So if we can get into this 52.92 and we sell off into this this level over here, then I'll probably take a you know, real quick long trade. You know what? That might be a scary one. Okay, so I'm going to have to time this with the actual SPY itself, meaning if the SPY is stronger and into a pretty good support level, then yeah, I'll consider taking Cena at this 52.92. But I do see right below that a gap fill. So you know what, I might actually wait for this level here, and also depends on when earnings, how close it is to earnings at that point. So I'm just going to keep an eye on Cena. But those are the ones that I'm keeping my eye on. Some are better than others. Definitely going to probably pick up some Apple if it gets into that level, and maybe because Apple is so expensive, I might pick up the Qs instead, as long as Apple coincides with the Qs. Okay, so what do I mean by that? Let's take a quick look. So for the Qs, which is of what Apple is a big player of, we have 64.58 as a support level. And then of course we have Apple at the 591.51. So basically if Apple is at the 591.51 and the Qs is on its support level, then I'll probably take a long trade on the Qs because it's just a little bit cheaper than what I can afford on Apple. Okay, so that is your 7-minute market update, weekly update. Thank you very much for watching my videos. I do appreciate it. Hopefully I can get my video cards in my computer and I can make a little bit more videos, and I can figure out more mathematically calculated levels, or at least support it a little bit better than saying, you know, it could be one of these 3 things, right? But in any case, you know, again, I really do appreciate you guys stopping by, watching these videos. Sorry it's been so long and I had to do it on my MacBook, but you know, God bless to you all. Good luck to your trading, and let's make some money next week, and hope to see you in the next video.